I bet you never thought that saving a few cents at the pump could hurt the global economy, did you? Oil exporting countries are currently in serious financial trouble due to the world's oil surplus. If the oil production rate is higher than the consumption rate for too long, the surplus could hurt the economies of the host countries and potentially the global economy. On February 16th, Saudi Arabia and Russia, as well as OPEC members Venezuela and Qatar, met in Doha to discuss their current oil situation. The initial problem is that oil is being produced at a faster rate than it's being consumed. Saudi Arabia, Venezuela, Qatar, and Russia have agreed to freeze production at their January levels. Iran and Iraq are not included in this agreement and will actually be continuing to increase their production. These factors combined are creating an increasingly large surplus of oil. While the surplus of oil is helping the consumer because gas prices will be lower, the overall economy is based on the amount of money that is flowing. Since prices are lower, less money is being moved around in the oil industry. The huge surplus of oil is actually hurting the economy of oil-producing countries. For example, Venezuela is facing possible default on its debt and massive inflation rates. Venezuela and Nigeria have both called for an emergency OPEC session. Russia is even having to deal with the economic sanctions in addition to the issues caused by the surplus. Individual countries aren't the only economies declining. As oil exports continue to decline, the global stock market inevitably takes a hit. Anglo American, for example, announced that it had taken a $5.6 billion loss in the fourth quarter alone and had to sell some of its assets, including its holdings in the coal and iron ore industries. As upsetting as it may be, low oil prices may not be the best news for the world economy. In a nutshell, overproduction of oil leads to surplus. If companies do not stabilize this balance by decreasing production, or at least making sure they do not increase production, then it will hurt the economies of the host countries. Ultimately, this could cause a major problem for the world economy. The issue is closer than we think, because oil exporting countries are already in financial trouble due to the world's oil surplus. We all want to save money at the pump, and I'm certainly not advocating for $4 a gallon gas prices again. We do, however, need to be aware of the possible repercussions of lower gas prices, and we should at least begin considering paying a few more cents per gallon in the interest of the world economy.